Welcome back to the deep dive. It is Sunday, February 15th, 2026. And I have to say, if you've been glued to the financial ticker tape this week, you're probably feeling a severe case of whiplash.
It's a strange time to be an investor, isn't it?
Strange is an understatement. I mean, look at the big picture. The S&P 500 is punching through ceilings we didn't think were possible. You've got UBS out there talking about hitting, 7,500 by the end of the year. The broader economy seems to be on a sugar high. But then you look at this one specific corner of the market software, and, well, it feels like a funeral procession.
It really is a tale of two markets. You have the AI infrastructure trade, which is just booming, and then you have what we're calling the software bear market. It is brutal out there for anything that involves selling traditional code.
Right, and that's what we're digging into today, because the narrative driving this whole tech wreck is singular. It's AI. The story everyone is telling is simple. AI writes code now. It writes fast code. It writes good code. So if code basically becomes free and infinite, then, well, the business model of selling software for a monthly subscription is dead.
That is the prevailing wisdom. I mean, we even saw Bill Gates recently warning about investment dead ends. And the implication is that the old guard, the companies that built the Internet 2.0 era, are basically walking zombies.
Exactly. But here's the thing. We have a stack of research today that takes a sledgehammer to that narrative. We're looking at a contrarian thesis that says this panic is completely overblown.
Okay.
In fact, the argument is that this fear has created a once-in-a-decade buying opportunity for some very specific high-quality companies.
It's the classic distinction, right, between a technological breakthrough and a business reality. Just because a new technology can do something, it doesn't mean it instantly destroys the economic value of everything that came before it.
Right.
Often the market just overcorrects. It swings from greed to terror.
So are we looking at the death of software, or is this just a massive sale on high-quality assets? To find out, we're going to look at two companies that have been absolutely hammered by this AI narrative, Wix.com and Adobe.
Two very different businesses, but they're both suffering from the exact same crisis of confidence.
Let's start with Wix. I think most people know who they are. If you're a baker, a photographer, or, my aunt running her flower shop, and you don't know HTML, you go to Wix.
Right.
You drag some boxes, drop some images, and boom, you have a website.
Yep, it's the definition of a low-code platform. They democratize the web for small businesses.
But here we are in February 2026, and the stock is, well, it's ugly.
It's painful.
Yeah.
Wix stock is down nearly 70% over the last year. It's currently trading around $70 a share.
70% down, that's a crash. And the logic seems pretty straightforward, right? If I can just open up a chat bot and say, make me a website for a bakery, and it spits out the code in 10 seconds, why on earth would I pay Wix a subscription fee?
That is exactly what the market is thinking. They assume AI lowers the barrier to entry to zero. If anyone can prompt a website into existence, Wix's value proposition just evaporates.
What?
But if you look at the analysts' targets, the people whose actual job is to crunch the cash flows and look at the books, they have an average price target of $151.
Hold on. The stock is at $72, but the math says it should be $151. That is a massive disconnect. Usually the market is efficient. Why is it so wrong here?
Because the market is ignoring the cash. And this is where we need to get technical for a second, because the numbers tell a very different story than the narrative.
Okay.
Wix currently has a market cap of roughly $3.8 billion.
Okay, $3.8 billion.
But in the last 12 months, they generated $570 million in free cash flow.
Let's pause and unpack free cash flow for a second, because that term gets thrown around a lot.
Sure. So free cash flow is the cold, hard cash left over after the company pays all its bills, pays its employees, keeps the servers running, and reinvests in the business. It's the money that actually ends up in the bank account at the end of the year.
So you have a company that costs $3.8 billion to buy the whole thing. And it's printing nearly $600 million in cash every single year.
Exactly. I mean, if you do the math, that is a yield that you almost never see in the tech sector. It's dirt cheap. It's priced as if the company's going to go bankrupt in 5 years.
But are they going bankrupt? Is everyone canceling Wix to go hang out with ChatGPT?
The data says no. In fact, it says the opposite. Revenue growth actually accelerated last quarter. It's up to 14% compared to 13% the year before.
Wait, so the narrative is AI is killing Wix, but Wix is actually growing faster than it was before the AI panic started? How is that even possible?
It just highlights a fundamental misunderstanding of the user base. I mean, think about your aunt with the flower shop.
Okay.
Does she want to spend her Tuesday afternoon prompt engineering a bot to write Python scripts.
Definitely not, no. She wants to arrange flowers. She wants a dashboard that works.
Precisely. She doesn't want to be a software developer. Even with AI help, she wants a solution. And Wix knows this. They are pivoting hard to integrate AI into the platform.
Ugh.
So now, when your aunt needs to write product descriptions or generate images for her bouquets, she does it right inside the Wix dashboard.
So AI isn't the competitor, it's the feature that keeps her there.
It makes the platform sticky. It increases the addressable market because it makes it even easier to finish the website.
There is also something in the research notes about a hidden gem inside Wix, a company called Base 44.
Yeah, this is a fascinating part of the story that most investors are completely missing. So, Wix acquired Base 44 last fall. It's a platform for building native mobile apps without coding.
Okay, so Wix for websites, Base 44 for apps. That makes sense.
At the time of the acquisition, Base 44 had virtually zero revenue. It was a speculative bet, a startup with a cool tool but no money coming in.
Right.
Fast forward to now, February 2026. Base 44 is on track to hit $50 million in annual recurring revenue, or ARR, by the end of this year.
From 0 to 50 million in, 18 months? That is rocket ship growth.
It is hypergrowth.
Yeah.
And it validates the strategy. If you have a Wix website, the next logical step is wanting a mobile app for your customers. Base 44 plugs right into that ecosystem.
Wow.
So look at what you're buying at $72 a share. A core business that is printing cash and accelerating, plus a hypergrowth engine and mobile apps attached to it.
And the market is treating it like a dead asset. It really does sound like the market is pricing in a funeral for a patient that is currently winning a marathon.
That's a great way to put it. Fear creates mispricing.
All right, let's shift gears to the big one. Wix is great for small businesses, but Adobe is the standard. If you're in a creative industry, marketing, film, design, you live in the Adobe Creative Cloud.
You do.
But looking at the charts, Wall Street thinks Adobe is just as dead as Wix.
It's been a brutal year for them. Adobe stock is down about 45% in the last 12 months. It's trading around $258.
And again, we see this massive gap. Analysts say it's worth $429, but what jumps out at me in the source material is the valuation.
It's shocking. Adobe is a massive established monopoly, yet it's trading at 12.5 times its trailing operating earnings.
12.5 times.
Yeah.
Just to give the listeners some context. 12.5 times earnings is usually what you pay for, like a boring utility company, a water company, or an electric grid that grows 1% a year. You don't pay 12 times earnings for a tech giant.
It is historically low. We have not seen Adobe trade at this multiple in a very, very long time.
But I have to play devil's advocate here because I think the fear with Adobe is more visceral than with Wix. I've seen the demos. I've seen the new models from OpenAI and Google. You can type, "Make me a video of a cat riding a motorcycle in the style of 1980s cyberpunk," and boom, it's there, high definition. If I'm an ad agency, why am I paying for Photoshop and Premiere Pro and After Effects when I can just conjure content out of thin air?
That is the trillion-dollar question. That is the bear case. The idea is that Adobe's entire suite is just a complicated way to make pixels, and AI makes pixels better and faster.
Right. If the output is the same, why pay for the tool?
But let's look at the actual workflow of a professional. And this is the key word, workflow. If you're a marketing agency working for a global brand like Coca-Cola, you aren't just making a funny video of a cat.
No, you have strict guidelines.
Exactly. You're working with specific brand colors, Pantone matches. You need vector files that scale for a billboard in Times Square. You need legal indemnification to ensure the image you used isn't stolen or copyright infringed. And most importantly, you need editability.
What do you mean by editability?
Okay, so imagine you generate that AI video of the cat. The client looks at it and says, great, but move the logo 2 pixels to the left and change the cat's collar to blue.
Ah, the classic request.
The classic. With a generative video, you can't just move the logo. You often have to re-roll the whole prompt and hope the AI gives you something similar. It's a slot machine.
Ah, I see. So Adobe owns the ability to actually control the work.
They own the layers. They own the integration. A creative director doesn't want to spend their day prompting a bot to rebuild a video editor from scratch. They want to open the tool that connects to their asset library, their billing system, and their team's cloud server.
So the argument is that Adobe is the operating system for creativity, not just a drawing tool.
Yeah.
And you don't replace an operating system just because a new toy comes along.
Yes. And while the source material admits there are real competitors, Figma and Canva are mentioned specifically as legitimate threats that have taken some market share, the idea that an AI bot replaces the entire Adobe ecosystem is pure science fiction right now.
Okay, so the moat around Adobe is deeper than people think. But what about the financials? Is the business actually hurting?
Adobe posted record revenue last quarter, $6.2 billion. They have a massive backlog of business. And perhaps most importantly, they're putting their money where their mouth is. They're buying back their own shares aggressively.
Which is usually the ultimate signal. Management looks at the $258 stock price, looks at their bank account and says, we'll take those shares, thank you very much.
They see the discrepancy. They have pricing power. They've grown revenue for 10 years straight. The idea that this evaporates overnight because of text-to-video prompting is just a massive extrapolation.
There's a term in the research notes that I really want to unpack because it made me laugh, but the more I think about it, the more profound it feels. The source talks about vibe code.
Yes, vibe code.
The source dismisses the idea of vibe code replacement platforms. For those who haven't heard this term, what exactly are we talking about?
It's a bit of a derogatory term for software that is generated entirely by AI. You ask the AI to write an app, and it writes the code. It vibes correctly, meaning it looks right, it seems to run, but you don't really know how it works because a human didn't write it.
It's a black box.
Right. And this brings us to a concept that is critical for investors to understand: operational risk.
Break that down for us.
Okay, imagine you run a logistics company. You have trucks on the road, invoices going out, payroll to process. Your software system is your lifeblood.
If that goes down, I'm out of business.
Precisely. Now, are you going to fire your software vendor who has a 24/7 support team, security audits, and a legal contract to switch to a system you generated yourself using a prompt on a Tuesday afternoon?
When you put it that way, it sounds insane.
Because it is. I mean, who supports the vibe code when it breaks at 3:00 a.m.?
Oh.
You do. Who checks for security backdoors that the AI might have accidentally hallucinated into the code? You do.
So the friction of switching software isn't just about whether the new tool works, it's about trust, it's about accountability.
Exactly. The source calls it laughable, that small business owners are going to mass churn off trusted platforms to build their own bespoke AI tools. It's the same logic as saying, why do people go to restaurants when they have kitchens at home?
Right.
Just because you can cook doesn't mean you want to do it for every meal, especially when the stakes are high.
It reminds me of the spreadsheet analogy we talked about before the show, the Excel moment.
Oh, absolutely.
Yeah. Back in the 80s, when electronic spreadsheets came out, everyone said, well, that's the end of accountants. Why pay an accountant when the computer does the math instantly?
And instead, the demand for accountants went up because suddenly they could do more complex modeling. They could do more scenarios. The tool didn't replace the professional. It leveraged them.
So in this view, Wix and Adobe are the Excel of this era. AI makes them more powerful, but it doesn't remove the need for them.
That is the contrarian bet. The market thinks AI replaces the tool. We think AI is the tool, and Wix and Adobe are the best places to use it.
I want to zoom out as we wrap this up. We're in a weird market moment here in 2026. The S&P is at all-time highs. Everything looks expensive. If you want to buy the hot chip stocks, you're paying a massive premium.
You're paying for perfection. And if they miss earnings by a penny, the stock crashes.
So where does a smart investor look? The source argues that alpha, that ability to actually beat the market, is hiding in the garbage bin. It's in the things people are throwing away.
It's uncomfortable. It feels risky to buy Adobe when everyone on social media says it's dead. But buying a monopoly with record revenues at 12 times earnings, that is the definition of a value play.
It's buying the fear.
It's capitalizing on the difference between the narrative software is dead and the reality software is evolving.
So to recap for the listener, we have a market panic driven by the idea that AI creates infinite free software. This has crushed stocks like Wix and Adobe.
Right.
But when we look under the hood, Wix is printing cash and growing a massive mobile business. Adobe is trading at historic lows despite owning the professional workflow that Hollywood and Madison Avenue rely on.
And crucially, the barrier to switching isn't just code, it's trust, support, and integration.
Which brings me to the final thought I want to leave everyone with. We started with Bill Gates warning about dead ends, and usually that sounds like a warning to get out of the old stuff. But let's flip it.
Okay.
In a world where AI can generate infinite content, infinite apps, infinite emails, and infinite vibe code, when supply becomes infinite, value drops to zero. We know that from Economics 101. So what becomes scarce in that world?
Authenticity. Verification.
Trust. If I can spin up 10,000 banking apps tomorrow with an AI, are you going to put your life savings in any of them? Or are you going to stick with the brand you've known for 20 years?
In a sea of noise, the trusted brand becomes the lighthouse.
Exactly. Perhaps the dead ends aren't the old software giants. Maybe the dead ends are the millions of generic AI clones trying to replace them. The moat might not be code anymore. The moat might be the fact that I know who you are and I know you won't disappear tomorrow.
That's a powerful framework.
Something to chew on before you sell your portfolio.
Thanks for listening to The Deep Dive. We'll see you next time.